You negotiate these things, so depending on who you are, if it was me or somebody brand new, if it was me, I'd want to do this for 3 to 5 years at the most. A novice, like the first trustee I believe he got, was 30 years.
So you sell it based on the future price, right? On the option price for the in 5 years or whatever? Is that something different?
Yeah, that's something different.
Okay.
Yeah,
So it's
No.
not similar?
yeah. Let me go over here, I'll come back to you.
Under what market condition will you consider doing seller financing? Because I'm thinking if the price is rising and if the buyer default, they can take it, the seller can take it back and resell it for more money. In that case, it's like minimal risk. But if you foresee in the near future prices may drop, then would you still do seller financing if you were the seller?
You repeat the question, please?
She wants to know when is I guess a good time,
Yeah.
or what conditions are a good time to do seller financing. And that really depends on the property and what, you as the owner are looking for or looking to buy. So for example, we're in the same situation that I was in 40 years ago when I got started. Interest rates back then were 18%, believe it or not. My mortgage on my house that I'm living in now, that I've been in for over 42 years, started out at 14%. Okay? Inflation was 21% back then. We are the same as we were 40 years ago. How did I end up selling my house that I had before I bought this one? Okay? I had an interest rate that was low at the time when I bought it. Somebody came in and they said, we're going to assume that loan at a lower interest rate, and we want you to take back a second loan or a trustee at a lower interest rate, and then we will pay all this money down so you can sell this property. I needed this much so that I could buy the next property, but I did not need all of it. And I did that for a 3-year period, and they paid me back in 3 years. So same thing today. There's lots of people out there that have just recently got mortgages for 3 and 4%. If they need to move, okay, then those are the questions that you need to start asking. Do you need all this money? Okay, talk to baby boomers like me. He just retired back there. I've been retired for a long time, although this is what I do in my retirement. Ask baby boomers, like, do you need all this money? Or are you willing to finance it just like he found this guy, in that situation? And so what you do, you're going to take this property, what's called subject to. You're going to not take over, but you're going to take that first loan subject to. He's going to take back another note, hopefully at a low interest rate, not what the bank is charging. And so now you're able to buy this property with little or no money down and never qualify for a loan. Okay? There's going to be, I'm telling you, mark my words, there's going to be a landslide of those coming pretty soon. Okay? Now you hear this fear factor that the world's going to fall apart just like it did back in 2008. No, it's totally different. You have people that bought their houses at this level, they got really good interest rates. For whatever reason, they can't make their mortgage payment anymore. A death in the family, they lost their job, maybe they're working at Twitter. Things like that. So they're not going to be able to make the mortgage payment anymore. These are perfect opportunities. These people are not going to lose their house because there's no equity like it was in 2008. They bought it here. It's still up here. Yes, it's coming down, but look, how much equity that's in there. Those are the people you need not start knocking on doors and saying, hey, you've got like $100,000 worth of equity here. If you get foreclosed on, you lose all that. Okay? I'll put a caveat to that in a second. Okay? You lose all that. So why not let me take over your loan and you take back some of this loan and make a new loan for me, and I'll put 10% down and I'll buy this from you. Why not? Those of you who don't have a house right now, a great opportunity to pick, I actually saw one on the MLS the other day. And it was from a builder, believe it or not. They were getting rid of this last home, and they put down there, you put 10% down and we'll finance the whole property for you for 30 years. I go, wow, if somebody's looking for a house and not have to qualify for a loan, that's a good deal.
Besides a deal like that, where else, is it pre-foreclosures that we'd be looking for that set of people?
Anywhere, absentee owners, anything. Pre-foreclosure is gonna be a little bit more difficult because they've stopped making their payment, and so now there's a big, $20,000, $30,000 that's owed. So it's not impossible, but it makes it a little bit more difficult.
Absentee owners might be a better way to go about
Yes.
that.
So in that example that you gave where it was 100,000, then became 200,000, and then the original $100,000 loan, isn't that a big assumption that that original lender would want to be wrapped around again?
So this is a private loan, private mortgage, okay? And that's a great question, because when you put these things together, unless it's you, okay, you wanna put it together where somebody can actually assume the loan and the loan's not called due, like the banks have what's called the due on sale clause. These are private, so they do not have due on sale, okay? His second has a due on sale clause because I told him to put it on there.
I wouldn't feel comfortable.
Okay,
Yeah.
yes, but that's a great question. Oh, you get 100,000.
Could you explain that clause? What does it do on your sale?
A due on sale clause is like Bank of America, Wells Fargo gives you a loan, okay? And it exists with all big banks and lenders. They have a clause on there that says, if you sell this property to somebody else, you need to pay us all our money. You can't just take over the payments, okay? If you know what you're doing, you can, okay? People do it every day. If you know what you're doing. The banks are so big that here comes property A, and then you're making the mortgage payment, and they go, check, she made the mortgage payment. Next month, the same thing, check. Third month, same thing. Fourth month, you sold it to Alex, he sends a check in, check. Fifth month, Alex sends a check in, check. The only time they're gonna be concerned is when they don't get that money and have to check that off. That's the only time. I've been doing this for over 40 years, and a bank has never, ever foreclosed on a loan, okay, and exercise their due on sale until somebody stopped paying. Then they wake up and go, oh, wait a second, let me call the borrower on this. And the borrower goes, I don't even own that property anymore. I sold it. Oh, what do you mean you sold it? Yeah, I sold it. Oh shoot, we better figure out what's going on. Yes.
I was just gonna give like a personal story on this. I just bought a foreclosure that was on the second, but the first wasn't foreclosed, and the homeowner wouldn't cooperate, so we have to like really hurry up and fix the property and sell it because we didn't know who to pay the money to, and we couldn't get the information. So eventually, title was able to find it in escrow when we sold it, but like they're not really, I don't know, just as a personal example of,
Yeah.
unless they're cooperating with you, it's hard to know who to pay the money to.
No, you can find that stuff out. I usually just call escrow, and they have ways of finding all that information out.
Joe, so you're saying that you as a seller, that you would be the bank, obviously typically you're looking for 3 to 5 years on that wraparound. What's that rate looking like? And then what's the rate looking like if it was like that home builder that you were saying that was a 30-year loan?
Yeah. It again depends on the seller, me, okay, or the bank. The bank was offering 5%, okay? If it's me, I want to get paid back as quick as possible, so I put my interest rates pretty high. Again, it depends on the buyer at that side whether they're going to agree, because it's all negotiation back and forth. But the higher the interest rate that I put, the more likely is I'm gonna get paid back in a shorter period of time, okay? But let's say, you want to just put it at 4 or 5, because you need to sell the house. And that's the best way, or the only way you're gonna sell it, is to put it at a lower interest rate, okay? I mean, obviously, you're still getting more than putting it in the bank, okay? But you're not getting, 10, 15, 21% on it.
Is
So-
there, to the same question, is there a restriction imposed by the government as far as to what's the max rates you can charge?
There are usury laws, but they don't apply to individuals.
Oh, it doesn't apply to
No,
everyone.
it applies to big companies and stuff, but not to individuals. Yeah, but now, if I have a property to sell and I told you, yeah, I want to charge you 21% interest, what are you gonna say?
Depends on how desperate I want to buy the place. Probably not.
How desperate you are to buy, I guess. When I have something, I will call you.
Depends on the
But,
purchase
you know,
price.
you have to be reasonable, most
Yeah.
people are reasonable, with the price as well, you know? Now, when you're doing stuff like this, and thank you for bringing that up, because I remember these things,
Thank you.
that's a lot of money. Okay.
It's 100 grand.
That's a lot of money. So anyways, when you're doing things like this, always figure out like, you know, what the ins and outs are, how much you're gonna charge. If you charge more, are they willing to accept it or not? You know, all those things play out into it. How desperate you are to sell your property. If you're desperate, then you're gonna lower that interest rate so somebody's attracted to that property. If you're not desperate, and let's say you know put a property out on the MLS and you say, somebody come in with 10% down and I'll sell this to you with owner financing. Do you think that property is worth more or less?
Less.
Who said more? The property's worth more. Okay? Can you catch?
Yeah.
Watch out. I'm throwing. It's worth more because how is anybody gonna go to like a bank and get something for 10% down at this low interest rate? So that's worth something. So to me, the property's worth more if you do something like this. Okay? Yes?
Can I offer an example? I just did an owner financing deal, and the banks were quoting like, it was on like a 10-unit property, and they were quoting me like high 7s, maybe 8%, but I got like 5.5% owner financing. Because, and the unique situation there is, it's 10 units, but I have enough land to add 5 more units, so I'm gonna get a construction loan, so I don't have to qualify twice. I don't have to qualify for a bank loan and then a construction loan. I can just qualify for a construction loan, get the construction done with, and then refinance with this additional loan and just put it all together and pay off the original loan. Just as a,
But they're gonna
example.
see that you're paying every month, right? But by your bank statement or whatever.
Yeah, it's all recorded, and I think it gives me good standing. I don't know if it does or not.
They're gonna see a first loan, so you may not be qualified because you have first loan.
But yeah, that's all the negotiation. I didn't hear you, sorry. That's all the negotiation. I negotiated so that the owner financing will allow second position loans like that. Because they weren't initially, in the negotiation, they weren't initially allowing that. They were
Yes.
only not allowing any second position loans, and I said, basically said, I won't buy the deal, otherwise, when they need to sell.
When you're talking to people, to sellers, about their properties, whatever it is, condo, single family, multifamily, one of the questions you need to ask is, are you willing to do some seller financing on this property? That's one question that our wholesalers literally ask on every call. Are you willing to do seller financing? You'll get, what is that? So you need to take a minute and explain to them what seller financing is about. And I think I put a video together, I don't know, did you finish that
It will
one?
be out this week.
Okay, it'll be out this week, a video. So, yeah, always ask, because in anything real estate related, if you don't ask, you're not gonna get it, you know? Especially now, it's like, if it was January, February, March this year, okay, which has been like the biggest turnaround in my lifetime, I made the most money on a flip early in the year, and now I'm gonna make probably the least money on a flip at the end of the year. And that's how much of a swing it has been. But if you don't ask, you're never gonna get an answer. And the answer may be no, but then follow up with that is, why do you say no? Do you need all this money that you're gonna get out of here to go buy something else? Where are you moving to? Get personal with them, okay? Try to find out what's going on and ask those questions because they may not need the money. If you do, let's say you do seller financing on a property that's $500,000 and it's free and clear, and they say, yeah, I'll do it $450,000. You give me $50,000 and I'll be the bank. Okay, do you know when they sell that property, it's not like it is selling it and they get taxed on it, but they only get taxed on the money they received that year. It's not taxed on the entire amount, okay, which a lot of people don't know and they don't understand that. So if they want to save on taxes, then let them spread that out over a period of time, and especially if they're older. It's like if you don't need the money. We had one guy, one of our wholesalers was talking to him. He goes, yeah, I got 5 properties to sell. I go, awesome, 5 properties. Okay, what are you doing? Well, I just sold one the other day, and I want to sell all of them before I die because I don't trust my kids to do anything with these properties, and I would rather just sell them. And I go, I'm kind of like, seller finance. And so he's explaining seller financing to him. He goes, I think I'm just going to sell them. And what he doesn't understand is every time he sells this property, he has to pay capital gains on the entire amount. Whether if he did seller financing, he would only have to pay on the amount that he receives that year. And he's not going to own the property anymore because he sold it. And so when he passes away, he can just pass this along to his kids instead of the property. Isn't that a better win-win situation? I thought so.
Is that the main win for seller financing for the seller? Is the taxing? Okay.
Yeah. To get rid of the property, not get taxed completely right away on the sale of their property. Correct.
So are you saying if, for example, older people have like 1 million equity, like capital gain right now, they can sell it, they can finance somebody for 30 years and basically not paying this capital gain at all? 1 million divided by 30 years, not too much.
Correct.
Okay.
That's totally correct. Yes.
That would just be each consecutive year, whatever they made that year, that's
Correct.
all their tax.
That's correct. Yes, that's correct.
And is it, sorry, this might be a really silly question. In order to have that note secured, does the escrow handle like the recording process just the same as like a bank note?
Yes. Yeah, absolutely.
So in terms of avoiding capital gain, would the seller financing be a better strategy, or would like they do a 1031 exchange either into a like-kind property or to like a Delaware statutory trust? Which way would it be better for them to defer the capital gain tax?
So the best way is to do a 1031 exchange, so that way you don't have to pay anything.
Yeah.
The problem with that is you have 45 days to identify the up lake property after you sell the first property, which a lot of people, they just don't have the time to do that or find something. And so now their exchange is null and void, so they have to pay they have to pay taxes on the entire amount. Okay, but yes, that would be the best way is to do a 1031 exchange. The reason that 1031 exchange came about, now you have to understand, all these laws and all these things, these tricky things that I'm telling you, this is what the wealthy do, okay? 1031 exchange is a way to build your wealth, okay? So I bought a condo here, I paid $50,000, it got up to $500,000, but now it's 40 years old, I'm starting to have the HOA calling with problems and stuff like that. So I'm tired of it, so now I'm gonna exchange it. So I exchange it and I buy a brand new house in Lake Elsinore for $500,000. But now I've got a brand new house. I do a 1031 exchange. I don't pay any taxes whatsoever. So I go from a little condo to a house. So your goal, now if you're young, if you're young and you want to create wealth, you buy a house, okay? In 2 years, if it's appreciated enough, you sell it. There's no capital gains, okay, up to 250 per person. You go buy another one, a bigger one. By the time you're my age, you're living in a mansion, okay? You step up every single time. That's exactly what a 1031 exchange is. You start out with something small, and then you go up to the next step. And then you go up to the next step. And you keep going up, okay?
So it's probably more for the investor that still want to be in the real estate market, then
Correct.
it's better for them to defer it.
Correct.
But if they want to cash out, they don't want to manage the property actively anymore, then maybe do a seller financing, so at least they don't have the tax burden always in one calendar year.
Correct. Absolutely. Should I give, she already has one. She already has one. She's giving me these like dirty looks and stuff.
To get out of 1031 exchange without taxes, this way, right? She said, right, or to die, right?
Yes.
And that's step up basis, right? Step up basis, right?
Okay,
The
so we
kids.
have what's called a step up in basis.
Uh-huh.
You're married, okay? When you're married in California, we're a community property state, so it automatically goes to the spouse. However, if you do not have your property in a trust, okay, if you have it in just your name, you have to go to probate. You never want to have to go to probate. Please, if you own a house and it's in a trust and it's in your name, please put it in a trust, or if you have an investment, put it in an LLC, okay? Because if not, you're going to give probably 30 to 40% of your gain to the government. I don't want to give them anything. I have to, but I don't want to, okay? So yes, another rich people thing, there's ways to avoid that, okay? So put it in a trust so that that doesn't happen. So in this case, the first person passes, okay? That day that they pass, whatever the value of that house is what we call the basis. They may have bought it for $10,000, but now it's worth $1 million. The wife, because the wives always outlive the husbands, the wife can literally sell that the next day for $1 million and pay 0 in capital gains. It's called the step up in basis. Okay, that's for anybody. Anybody can do that. Okay, so ladies, when your husband kicks the bucket, sell the house, move to Hawaii. I think she had something for sale in Hawaii. So talk to her and live a happy life after that. Yes, in the back. Do you have a question? No.
Oh, I have a question. So for this, like, step-up basis, that applies to both the primary residence and the investment properties, right? As long
Yes.
as the spouse own it together.
Yeah, it's so far. I don't like to talk about politics, not really. Our current president is trying to get rid of all that stuff.
Oh.
Okay, so, you know, keep your ears and your eyes open. That doesn't happen. I don't think it's going to happen, but who knows? I mean, who knows? Yes.
I'm sure if you ask 100 CPAs, they have 100 different answers, but mine was saying that not to put it in the trust, because if the person that the trust is in dies, then basically you can't do, it messes up the 1031. And to put it in an LLC or an S Corp or something, because you can always change the members of that. And then they can continue to 1031 it over time, basically forever.
Okay, I am not a CPA. I am not an attorney. Okay.
I don't know if that's right.
I can tell you that if you put it in a trust, it's easy to change people's names. A trust is a very private instrument. The only people that have access to that is you. So in a trust, you've got the trustees, so let's say husband and wife, and then underneath them you have the beneficiaries. So if both husband and wife died, then if the properties goes to the beneficiaries, let's say it's the 3 kids in the family. And I usually put the oldest kid as the person who is going to adjudicate that trust, because he's the oldest. I say he, could be a she. He or she is the oldest and I trust them the most, so I do that. But if you don't, if you need to hire a professional and put them as a beneficiary for the kids, If the kids are underage, then yes, you would want to think about, okay, I need to put like my sister on there until my kids reach a certain age. So yes, there's lots of things to think about, but an LLC is no different than a trust. It's all the same. You can change out names, at will. An LLC is actually a little bit more difficult because every time you sell or change out a name, you have to let the government agency know that that's what happened.
And you don't have to pay with the trust. You don't have to pay the state.
Correct.
So
Yeah, there's
it's
no
actually
fees.
cheaper.
There's
to
no
do it.
fees.
It's between you and your whatever party you're doing it with. So you don't have to pay the LLC fees.
And I know who can open trust for $800. That's kind of cheap.
Thank
I
you.
don't need that anymore.
As far as you know, for the step up to apply, does the husband and wife, do they both have to be in the title? Or like how people, the husband and the wife before they got married, they each own a property, and so they own the properties individually. But then someone dies and
If you own a
Does that
property
apply?
individually and you pass away, it goes to probate.
but it's in his trust to give it to the wife, although the wife is not.
The property has to be titled in the trust.
Yeah.
Okay, so if he has a trust, let's say it's just
Oh,
him
no.
that owns the
So-
property in his trust, okay, and then the trust says, these are the beneficiaries, my wife being one, then yes, it will go to the wife. But it has to be in the name of the trust, not his name,
Okay.
not her name, in the trust.
Yeah.
Okay, that's really important in the trust, because if not, the title company's going to look, John Doe. There's no trust behind that. Sorry, you have to go to probate. Go give them 40% of your earnings.
Yeah, and it doesn't just apply to property. That's what you have to think about too. You're just not talking about property when you're talking about a trust. You're talking about anything that's over 51,000 and some change. I can't remember the number, but it's anything that goes over that. Bank accounts, cars, anything. And that's step up and basis is a whole different thing, right? What you're talking about, but that's what we're talking about. They get the step up and basis because it's in a trust. So it has nothing to do with anything else. It's just having a trust, you get the step up and basis.
Yeah, your bank account should be in the name of your trust.
Yeah. Your cemetery.
Your cars are debatable, because we used to buy cars for 5,000 and 10,000, but now they're 100,000. So, if you want to put your car in your trust, that's fine. It's debatable, but you can.
Does the step up rule apply to children? Like if I were to pass it on to my kids?
You have
Zero
to die.
trust.
You have to
Right.
die.
If
So yes, so it goes, there's a
yeah,
beneficiary.
if something happens to me.
Yes. So yes, if you're going to pass on a property because you die to your children, they will get the step up in basis. Yes. Yeah, that's really like the bad part about step up.
So to clarify, so
Thank
for
goodness
example,
I
the
don't know.
husband and wife have a trust, and then if the husband pass away, the wife gets it, then that's $1 million. So she get a step up base of 1 million, right?
Correct.
But then maybe later on, the wife passed away, the house is worth 2 million, but then the children are in the trust, then they get a step up base of 2 million.
Correct.
Okay. Oh wow, nice.
Yes. No, absolutely. The wife probably is gonna sell that $1 million house because the husband's not there anymore. So she's thinking, hey, it's time to go to Hawaii, okay, and live a better life than this guy was giving me. Just kidding.
Okay.
Just kidding. Any other questions? Okay, crystal ball. Okay, so 2023, I need some predictions. What do we see in 2023? Let's start with interest rates. How high?
In the next 9 to 12 months, I say 9.5.
Okay,
6.25. That's
and why do you think they're gonna go down?
I was talking to a lender, and they said that second quarter of next year, they should be around that amount. That was their guess.
Okay, so 9.5, 6.25, anything else? Anything higher? No? It's coming your way. Ready? It's $100,000 at 9.5 there. I think again, my crystal ball here, that's why I bring it. I think we're gonna get up to probably 10 before you see anything drop. I would have said something different if, again, here's politics. If the elections had turned out a little bit different, I would have said, we'll see something different. But I've seen this rodeo too many times in my lifetime. And I mean, all you have to do is listen to the Fed. The Fed literally comes out and says, we want to destroy the housing market. That's his words. And how do we do that? We raise interest rates. Okay, thank you. If you're thinking about buying something now, I would encourage you not to buy something unless it's the most fantastic deal in your lifetime that you just can't pass up.
Or
Okay.
unless it's seller's financing.
Or seller financing. I get wholesale deals thrown at me every single day. And the wholesale deals I get now, the start of this year was, get in quick, and we've changed it where we want you to offer us a price because they were getting more. Now it's like, yeah, we were hoping you'd take it at $1 million, but we just dropped it to 900,000. Well, what does that tell you? They wanted to make 100,000 on you between. It's like, come on. So it's totally changed, totally the opposite. Okay. Anything on the MLS, if you're offering full price, if you're an agent, you're not doing justice to your clients. Properties are not going full price anymore. They're going way less than that. Okay, so don't be afraid to offer less and negotiate. It's not like people are, knocking on the door to buy this property. It's just not happening right now. So as agents, you have a fiduciary responsibility, okay? And if you're not an agent, you don't have any of that stuff. But as an agent, you do, and so you need to tell them this is a different market. Let's start low, okay? And if they're interested, they'll counter back, okay?
Yeah, so how low would you suggest, like, say we submit the first offer, should we lower like 10% lower, 15% lower, like, is there like a number somewhere?
Depends on the